Okay, welcome guys to the sharpening session today. So for some reason I couldn't hide my taskbar, so that's kind of in the way today, but no worries, we'll crack on. So welcome to the sharpening session. Of course it says it's Q&A, so mainly what we're going to cover is whatever questions you guys have, whatever you guys need. I'll check my chat boxes and obviously make sure that I'm keeping an eye on the chat. But of course these are sessions that are for you guys. If you have questions on risk management, on the UFOs, on autoclimate, on how to manage your trade once you're in the trade, on anything on the methodology, any trading questions in general, if I can answer it, I will. So you guys let me know on the chat box what it is that you need. Now we normally have a sort of topic for the day when we go through sharpening, so I've got that as a backup if we need to, but otherwise I'm going to leave it to you guys to tell us what you want to know, what you want to find out. So I just realised I look a little bit dark there on the screen, so maybe that will make it better, maybe not. There we go, you might see me a little bit better now. Okay, so just to introduce, my name is Becky. If you didn't know that, my email address there is becky@traddictiv.com, so you can email me there if you need. There's also tradewithufos.com/Becky. I still have gigantic arrows from yesterday. I'm not sure how I did that, but anyway. Now you can come to tradewithufos.com/Becky. Set yourself up here with a free membership. Once you have a free membership, you will get recordings of the sessions that we do, reminders of the sessions that we do. You'll get an email every day that's got the statistics around 5 of the major markets in the world. And what's most important for me is that you can come and ask a question publicly. So if you have a question and you ask it publicly and I answer it publicly, other people can learn from it. Or you may find that someone's already asked that question, in which case you've got it there to see. Okay, so that's that. Now let's just make sure that we cover the disclaimers, so let's get that on there. So those are being highlighted at the moment. Of course, important that you guys understand the disclaimers, and to understand that when you watch these kind of videos, it's a demonstration of what we do and how we think about the markets. You can ignore it, you can take it on entirely, you can do something in between. Totally up to you as a trader to decide what makes the most sense for you and what you're going to do from there. So keep an eye on the chat box. I don't see anybody suggesting anything at the moment, so perhaps that means you've got nothing burning that you want to cover. So I'll explain very briefly the setup of these sessions, and then we'll go into understanding a concept which I'll go into, which is essentially understanding the probability rates of our UFOs and of what we do as traders. So let me just cover this now. So we've said hello, so hello everybody. Now just to say, we are simulcasting, so some of you are watching this on YouTube, some of you are watching this on Facebook or other sort of free means of accessing it. So what that means is we're streaming in different places at the same time. One of the places that we're streaming is our closed coaching sessions that people are paying $21 a month for those closed coaching sessions. Now the difference between the free sessions and the closed coaching sessions is that the closed coaching sessions have more of our time. So we'll go through a point. If it's live trading the markets, then we'll place a trade so that those that are watching for free get that and they can understand how we do things, and they're not necessarily missing out on understanding the entire methodology. And then we'll cut the streaming and continue in the closed session to answer any questions that come from the closed session, to continue to look for new opportunities that only the people in the closed session can see, as well as for these kind of sessions, sharpening, we're obviously not trading. It's a weekend, most markets are closed, but what we can do is continue a point or change a point for the next half. So somewhere along the middle of this session, I will be cutting off the streaming to YouTube, Facebook and other places like that, and continue within the closed session. But any questions that you have, if you are watching live on YouTube, just let me know. I will make sure to answer them. I won't cut it off without answering any questions that you have. Okay, so let's carry on. So what I was going to do today, unless you guys have anything different that you want to make sure that we cover, is to understand this percentage here. I had this question yesterday. This is what made me think that this might be a good thing to go over to make sure that you guys understand. So this percentage here, again, apologies for the absolutely gigantic arrow. It is something I don't know how to change, but hopefully it makes it really easy to see what I'm pointing at. So this number here, 49.37. What is it? Now, for those of you that have UFOs on TradeStation, you can use this tool to your advantage. If you have the UFOs on TradingView, unfortunately this element or this function doesn't exist on the TradingView version. It's one of the reasons that the TradeStation version is slightly more expensive. But if you do have TradeStation, or you can open a TradeStation account for relatively cheap, then this might be something that comes in useful. So first of all, where did we get this number from? If you edge of any UFO and click yes, and it will open up this section. So you'll see here I'm looking at the inputs tab. So if it comes up and it's looking at general or style or color, just make sure you navigate to the inputs tab and you'll see what I see. So there are different things going on here. We have calibration, UFO stats, show the flying saucers, show the UFO bands, hide hit UFOs, show labels, and the font size. So the bit that we're going to focus on is show UFO stats. That's what that number is, it's UFO stats. So at the moment it's on true, which means I see that number. If you don't see it, that's because it's probably defaulted to false. So if I change it to false, that number's just disappeared. So if you don't have it, double click on our UFO, click yes to customize the study, and just change this in the value to true, next to show UFO stats. Then when you click OK, that number will appear. Now that number is looking through different data to come back and tell us essentially a probability rating. What's the probability that these UFOs work? Now, how do we define work? For different people, depending on where you put your targets, depends on what work means. So if you have trades at 1-to-1, say, so let's say we take this UFO and you have a target here. Well, if you're only taking 1-to-1s, then that worked. If your target is 10-to-1 away and price came in and moved away from the UFO, didn't quite hit that and then came back, then that didn't work. It didn't hit your target. So we have to make this a standardized thing, an objective thing. It doesn't matter where your targets are. So the way this number is calculating to give us a number based on whether or not it works is based on how often does price move between UFOs. So meaning, we have green UFOs here, we can see them along here. If we had a red UFO, up here for example, if we had a red UFO, and it's a very big one, but if we had a red UFO, essentially what this is saying is what percentage of the time does price move between that UFO and hit that one? Or hit that UFO and then hit that one? How often does it move between UFOs? So essentially what this number gives you is a general idea of the functionality, of the probability of that UFO working. But you can change that number depending on where you put targets and depending on other variables. Now, what this number is doing is scanning through the amount of data that is loaded on the chart. So if I double click on price, and I can see here that I am loading, it should be 500 bars back. So let me just click OK, so that's on there. So 500 bars back, oh there you go, that's actually changed the number, which proves my point. So depending on how much data you load, depends on where it's getting its data from. If you data, it's going to take a long time to process, but that number is going to give you the percentage average over 30 years worth of data. What we want to make sure we do again is be consistent. 30 years worth of data on a monthly chart doesn't have to load as much data as 30 years of data on a 5-minute chart. That's going to be thousands and thousands and thousands of bars that it's got to load. So let's be fair, whatever time frame we're on, we use the exact same number so that this makes sense. So we use 500 bars back. So whatever time frame we're on, we're loading 500 candles to then get what this number is. The more or the higher that number, let's say it was 1,000 candles. If we say 1,000, the more data we have, the more accurate that number, because it's giving you an average over a greater amount of data, but it's going to take a little while to load. So if I click OK, sometimes you might come up and see that it takes a little longer to load. You'll get a little thing in the top left-hand corner that will say PD, pending data, and sometimes laptop or computer is, how TradeStation is performing, you might be waiting a little while for that to load. So notice how I loaded twice the amount of data and we had a different number. Not vastly different, it went from call it 50% to call it 47%. It didn't change too much, we doubled the data sample, What if we set 100 bars? Oh, sorry, wrong one there. So this is, you load the bars by double clicking on price. If I loaded 100 bars, what does that number say? 42. So that number is going to be different depending on how much data I have. If you think about anything in life, any business, any set of data, I mean, take COVID as an example. If you looked at what happened in terms of COVID cases in the last week, that's going to be a different number than in the last 2 weeks or in the last year. So the bigger the set of data, the more accurate that average is, but perhaps the less relevant it is. We obviously want to understand how recently it's been performing. So overall, we use 500 bars, and we use that regardless of whatever time frame we use, so that we are accurate and we are consistent with what we do. The most important thing you can do as a trader is be consistent. If you change the amount of data that you load each time, depending on what time frame you're on or what market you're looking at, or you don't set it as default, then you're going to get different numbers that mean different things in different places. This is the same with anything we do in our methodology. If you're trading a methodology and you sometimes apply a certain rule and you sometimes don't, you sometimes give it wiggle room and sometimes you give it more wiggle room, sometimes you don't give it any wiggle room. Sometimes you apply the EMA, sometimes you don't. Sometimes you use another variable, sometimes you don't. If you do that, you are changing your variables all the time, which means you have no idea what it is that's working for you or not, to either continue doing the thing that works or stop doing the thing that doesn't. So be consistent. So in this case, the consistency that we use is the amount of bars that's loaded. Now, one of the cool things about this number is it's telling us, like I said, the probability of the UFO working. And we define working by the probability of the amount of times it's going to hit one UFO and go to the other one. That other UFO could be 10 to 1 away, could be 2 to 1 away, could be 3 to 1 away, could be 0.5 to 1 away. So it's giving us an average regardless of where that target would be, that it hits that target. Now, you may be thinking, we explored this a little bit yesterday, you may be thinking, why would I trade something that has a really low percentage probability rate? So let's say this said 30%. Well, it's a 30% probability rate, doesn't actually mean that it's going to do worse than a 50% probability rate. That depends on where you put your targets. So let's explore this. Let's explore this concept. So let's say I place 100 trades, and let's say 30 of them win. Let's change the color of that so it makes more sense. 30 of them win, and therefore 70 of them lose. Those random numbers, okay? 30 of them win, 70 of them lose. Let's say when I win, I make bucks. I'm making that up. Let's say when I lose 20 bucks. Well, in which case, 30 times 20, did that wrong? Let's say I lose 20 bucks when I'm wrong. So for the ones that I'm right, overall, I've made 600 bucks. But I've lost 1,400 this other side. So overall, I'm down. So yeah, in that case, the probability rate doesn't, I'm going 1 for 1. For every $1 that I lose, I stand to gain $1. So of course, in that case, if your trades are 1 to 1, a 30% probability rate is not worth doing. What if things were slightly different? So let's say every time you win 60 bucks, and every time you lose 20, so minus 20. Well, overall then, with the ones that we've won 30 times 60, so that is 900, I believe. My maths isn't great, but I think I'm right there. 900. And over here, we've lost 1,400 again. I've done that right. Oh no, that would be 1,800. I apologise. I've done that maths wrong. I wondered why it wasn't quite working. So there we go. So 30 times 60 should be $1,800. There you go. And then over here, we've lost 1,400. So overall, we'd be up $400, even though we were wrong 70% of the time. So that probability number does not mean profitability, does not mean that you could necessarily make more money if that number is higher, because it depends where you're taking your profit targets. So just because it would be a reasonably low number does not mean that you would be losing a whole bunch of money, depending on where you put your targets. Now, saying that, wouldn't we rather have a higher baseline? Wouldn't that be something that we would prefer to do? So if we can get that number up and be efficient with our targets, lose less when we lose, make more when we win, even better if we have a higher percentage. So again, just to make the point, the number is not necessarily profitability. You've got risk to reward as another factor there that is going to impact ultimately how much money you win or lose. Now when it comes to this number, let's say you say, I don't know, it has to be a minimum of 40% and your average risk to reward is 2 to 1. Okay, so with average risk to reward of 2 to 1, you're still making money at 40%. Again, let's do the maths there. So let's say you have 100 trades, 40 of them win, and 60 of them lose. And when you lose 10 bucks, and when you win, you make 20 bucks. Again, I'm just making up these numbers, right? So that means overall here, you've made $800, and overall here, you've lost $600. Minus 600. So overall, you're up 200 bucks, and you were only right 40% of the time. So great. So let's say those are your numbers. Okay, so you 2 to 1. When you're right, you make 2. When you lose 1. So with those numbers, what if you could increase that to 50%? So you win half the time, you lose half the time. What if you can increase that to 60% and reverse those numbers? Yes, your risk to reward saves you from having to be right more often, but if you can be right more often, why wouldn't you use that? And this is where come into play. So based on 500 bars on Google on a 144-minute time frame, based on those variables, that's the probability ratio. Now, what if I change to a different time frame? Let's go to a 60-minute chart. Change to a different time frame. Now it's using a different amount of data. Funnily enough, it's a very similar number. What if we go to a 240? There you go. So we now have the difference between a 144-minute time frame and a 240-minute time frame is 9% worth of probability. So you can play about in different markets to figure out where you're going to have the highest probability. So let's say, for example, so that was a 240-minute chart versus the 144. Let's say, for example, you're new to this and you're thinking, why are they using a 144-minute chart? This is why. Because a 240-minute chart or a 4-hour chart, which is used by everybody all the time, normally, not always, but normally produces a lower probability rate. Not always, but a lot of the time. And why is that? Because we use these off numbers, 144-minute, 55-minute, 21-minute, 8-minute, 377-minute. We use those because they are Fibonacci numbers that are often used by trading technology. Trading technology that's trading in high volumes tend to come from the big boys, the ones that have a lot of money. So we want to be trading with them. So we look at the time frames that their software is looking at. And again, it doesn't always work out, but it works out slightly better. But with this stat, as an element that you can try, you can flick between them and see which one you want to use. In this case, the 144, if we were to trade UFOs on the 144-minute chart, we have a 50.94% that price goes between the UFOs. That could be 5 to 1 away, 2 to 1 away, 1 to 1 away. If we look at a 240-minute chart, we only have a 41% probability of that working out. So we've lost 9% of time frame. Now again, you can play about with this. Let's make it up. Let's say 150. You know, I mean, of course, every time frame you look at, every 1 minute interval is going to come back with a different number. If we went 151, it's going to be slightly different, right? We just changed 1 minute on that interval and we lost 4% of probability. So you don't want to go crazy with this and just play about with every single minute that you can. Maybe look between the standard set of timeframes versus the Fibonacci set of timeframes that are similar to each other and figure out which one from there you're going to use. Now, just to say, this gives us our absolute baseline, right? This gives us our probability of price going between UFOs, assuming that all we UFO and then press sell at the next one. Press sell at a UFO, press buy at the next one, with nothing else involved. Now, if that's our baseline, we can add to that probability by adding in things like autoclimate. Autoclimate, for those of you that follow our methodology, you'll know this is the absolute first thing we ever look at. Do I have probabilities up or down? If it says up, then buy UFOs are more likely to work. So if all the time, all of the UFOs, probability rate, well, if I trade the UFOs that align with the autoclimate, that number is going to be higher. So this is the absolute minimum. Now, we also align our EMA value. So we'll have our EMA value from the bigger time frame, and we'll align that with our UFOs if we can, and that will be the entry that we take. So again, we're adding additional probabilities by doing that. You might have other probability variables that you add, perhaps a certain pattern that you look for, or it has to be a round number, or another indicator that you use, or a crossover of different indicators, or other things that you add in, fundamentals, that increase this probability. So this number is your baseline, minimum, because it assumes you do nothing else than just play between UFOs and have no other variables in the way. So again, this is something that is your baseline, it's your minimum, something you can add to with other variables. Now I'm just checking the chat box here, can't see any questions. Again, you guys let me know if you have questions. If you have anything that is confusing or something that you want me to go over, just let me know, no problem. Now, let's have a look at different markets just to play about with this a little bit more. At the moment, we're looking at stocks. What if I look at the Euro US dollar? So let's go on to currencies here. So again, currencies, Forex, cannot be traded through TradeStation directly. You would have to trade it through FXCM and others, right? There's loads of different brokers you can use to trade Forex. But you can use, and that's what I do personally when I trade Forex, I use TradeStation to do my analysis so that I can get this number. It's one of the reasons I use it for my analysis. So you can get that number and again, play between the numbers. So let's say you say this is a 144-minute chart. What if I go to a 240? What happens there? Well, here, this was the reverse of what we would expect. But hey, good job I looked, because that's just increased by about 20%. By looking at a 240-minute instead of a 140-minute on this particular market has increased my baseline probability to 66.96%. And then I can add to that by trading with the climate, adding my EMA, adding other variables, placing targets in different places. So again, you can play about with that number depending on time frames and depending on markets. Let's have a look at futures. So let's have a look at oil. So if we look at futures, and again, I'm looking between the 144 and the 240. It could be any time frames. If you look at really small time frames, then you'll be able to have a look at that as well. Now, let's just wait for that to load. See, this is what I mean about the pending data. So when it's trying to load a certain amount of bars and it can't, it's going to come over to there and it's going to say PD, a little yellow box. That's telling us that it's pending data, it's still loading. But there we go, looks like it's loaded now. So this is oil. So again, I'm just showing you different markets that you can look at. We've looked at a stock, we looked at Google, we looked at the euro dollar as a Forex currency pair, and now we'll look at oil as a futures contract that you could look at. So again, this is the 240, it's showing us 56.44. We go to the 144, that's increased by 5%. That's normally what we'd see, is that those Fibonacci timeframes perform better. Not always. We just saw with the euro dollar that it was the opposite of that. Performed much better with a standard time frame than it did with a fib time frame. In Google and in oil, so far, we've seen that the fib time frames perform slightly better. That's what we would expect based on the theory, but it doesn't always work out that way. So again, you can use this feature to help you there. So again, if I have a 61% chance that price moves between UFOs, as long as those UFOs are at least, what, 0.8, 0.9 to 1 away, it's a profitable strategy. Let alone if I layer in extras with climate and other variables as well. Now, one thing that we'll expand on more in the close session is going to be how we calibration to figure out what calibration might be better. That we'll explore there. Unless you guys have other questions, I will look at one more example just to show you from the different timeframes and different markets what you can look at. And then we'll cut off the streaming and we'll go into looking at calibration. So let's stay on the 144 minute. Let's assume that we're using weekly and 144, and that's what we're doing. So now let's say you're going, I've got 30 different currency pairs I could choose from. I don't want to place trades on all of them. I don't want to look through. Even if I use scans, it's still too much choice. I want to spend half an hour max looking at different currency pairs, and I want to have a really small watch list. Let's say that's something you want to do. Well, how would you decide between currency pairs? There are different ways to do that. You can do it based on bias, based on I live in this country so I won't trade that currency, or I live in this country so I will trade that currency, or I know more about that country and the economics there so I'll trade that one, or I know more about the economics there so I won't trade that one, I don't want bias. There are different ways to interpret that. But you may instead use this feature to give you an objective reason. So let's say we're sticking to time frames now. Before, we were looking at the same market and changing time frames to see what that number did. Now we're going to stick to the same time frame and change markets. So let's say you want to trade only 3 majors, amongst others, but let's say you want to trade 3 majors. And on the 144 minute, the euro dollar has 45%. What about the pound dollar? Change to the pound dollar, that has 50. Out of those two, between the euro dollar and the pound dollar, which one would you rather trade? The one that has 40-something% chance of working, or a 56% chance of working? Again, bearing in mind that adding on different variables is only going to add to that number. So it's not to say don't trade the euro dollar, it's not good enough. It's saying if you have to choose between the two, it makes more sense to choose the one that has the higher probability rate. Now, what if we look at the US dollar Canadian? So we had 40-something% for the euro dollar, 50-something% for the pound, 50-something% for the dollar Canadian. So out of those 3, 2 of them are over 50%. So by this point you might say, right, okay, sack off the euro dollar. I don't trade that one on this time frame. Let's say we look at the dollar Swiss. And again, what I'm saying is you can cycle through the majors as an example if you're wondering which ones to trade, and look for the ones that have the highest probability. So 4 out of the 4 that we've looked at, the pound dollar and the dollar Swiss have the highest probability on this time frame. Might be different on different time frames. Let's have a look at the dollar yen. So this is an example of how you may cycle through these majors to give yourself a decision on which ones you actually trade. So 52%. So again, so far the pound and the dollar Swiss have been the highest. Let's have a look at Aussie dollar and then New Zealand dollar. And then we would look through the majors and decide which one's better. So far the euro dollar has been the worst performing. Aussie dollar's okay, but so far the pound dollar and the dollar Swiss are winning. And let's have a look at the New Zealand dollar. And again, you may have a spreadsheet or write these down so it's easier to remember exactly what the numbers are. Right, there you go. So New Zealand dollar, clear winner, 5.81% on this time frame that the UFOs are likely to work. So you might say, out of the 7 majors I could look at, I'm going to trade the New Zealand dollar and the dollar Swiss, because those have the 2 highest percentages there. And so it means when I then add in other variables, such as my climate, such as my EMA, such as where I put my stops and targets, I know that my baseline, even if I was to ignore all of those other things and simply trade between those UFOs, I'd have a 65% chance of hitting those targets. And those targets are going to be different places away. As long as they're more than 0.8 8 to 1 roughly, I'm going to make money. If they're 5 to 1, 6 to 1, 10 to 1, even better. Okay? So again, this is where you can use this number, use this percentage that we see there on the UFO stats to understand which markets might be better for us to trade if we want to filter down on a watch list, or which time frames might be better for us to trade amongst the ones that we've already decided to do. So if you're a swing trader, really you might choose between the 240 or the 144. So just look between the two. On the markets you've chosen to trade, look between the two and see which time frame performs better for you. So you can tweak the markets and the time frames that you look at to get this number to the highest it can be, so that your absolute base is the best it can be, and everything you do on top of that is an addition. So we'll stop here for the live stream, and then I'll continue in the closed session, and we'll look at calibration really quickly to see how we can use this number with calibration as well, to see what's going to work out better for us, to calibrate our UFOs to a different number. Just before we do that, you can play about with this yourself. For those of you watching the live version, I won't walk you through this, I'll do that in the closed session, but you can come to here, and under calibration, it will default to 0.5. Play about with that number between 0 and 1 to find what the best percentage is, essentially is what you would do there. So for those of you that have TradeStation and are watching free, you can fiddle about with that yourself and figure out what might be better for you. And we'll continue and give a couple of examples of that as we continue in the closed sessions. So give me a second, guys. When I close these, it takes a little second to stop streaming in different places. So give me a sec and we'll carry on there. For those of you watching live on YouTube and Facebook, things like that, hopefully you found this useful. If you're watching the recording, hopefully if you've got this feature on TradeStation, you can play about with that and find the thing that's going to make best sense for you in terms of where the probabilities lie. Any questions, email me, becky@traddictiv.com, or go to tradewithufos.com/Becky. Okay, I'm going to cut the stream now, and I'll see you guys.